Welcome to the Hansome Kelly Show, where if it impacts your money, I'm going to talk about it. All right, what's going on, guys? Seriously though, this is the Hansome Kelly Show, but I'm going to need you guys up before I actually get started. So in order for me to get renewed for an entire season, I'm going to need you guys to like this video. I'm going to need you guys to share this video and comment. If I get as many likes, as many shares as possible, I'm going to sign that contract and they're going to renew an entire season. So let's get to it, guys. Well. The Fed cut rates for the third time this year. Now, you're probably watching this and saying to yourself, I don't care. I don't even know why I'm watching this, But in fact, you should care. And I'm going to tell you why you should care. For starters, it impacts your money. And if it impacts your money, you should care about it. Now, before we actually go on and I tell you why you should care about it, I'm going to give myself a little pat on my back. Around January, early this year, the Fed, well, actually, it was last year they said it, but in January I was looking at it and the Fed said they won't be cutting rates this year. They said they'll be raising rates every time this year. And I was telling everyone, well, that would make sense that the economy is doing good. You would raise rates. But after looking at the numbers, I was saying, wait a second, they're not going to raise rates. They're going to cut rates. And the reason why I was saying they will cut rates because the economy is not good right now. It's a bubble. And if it's a bubble, if you want to keep expanding it, you're going to keep cutting rates. And that's exactly what's actually happening now. So for the third time this year, the Fed cut rates. And they said they wouldn't be doing it, but they're doing it. So I'm going to tell you guys why it's important to you and why you need to pay attention. All right, so let's start off with those who have money in a bank account in their savings account earning 0.03%, which is ridiculous numbers. 0.03%. Like, they have the audacity to do that. It's crazy. But anywho, back to what I was saying. For those who have the money in a bank account earning 0.03% in interest, lower interest rates impacts almost every financial institution. And this is mainly because you'll see a decrease in what your cash actually makes. So, you can go from 0.003% to 0.002%. And you'll see this in the mail or email. It'll say something like interest rate adjustments. And pretty much what they're saying is that there's going to be lowering what your money is going to be allowed to make on interest. All right, so let me actually break down how banks make money. So banks want you to deposit your money with them so they can use that money to make investments, so they can make other deposits to other people or other ways for them to generate income back to them. It's all just a business. Now with that, banks make money on the spread between what they make when they invest your money and also how much they'll be paying you back. All right, now the Federal Reserve is like the bank to the bank. Now the federal funds rate determines how much money the bank is actually able to make by investing your money. Now, this is because the federal funds rate is the rate that the banks will be paying every time they want to borrow money from the Federal Reserve. So when the Fed lowers its rates, it indirectly lowers how much money the bank is actually allowed to pay you back from your savings. So this is a business. The more that the bank has to pay out, the less profit that they'll be making. So that's the reason why they have to lower their rates so they'll have more profit. There's also another reason why online savings accounts like Ali Bank, these are better than banks, and mainly because they don't have an overhead like an actual bank does. The actual bank has to worry about physical locations, and an online bank doesn't have to worry about that. So they're able to pay more. Yeah, they'll be lowering their rates, but they'll still be able to pay you more back on the money that you're giving to them. Now, in times like this, when they're lowering rates, I recommend you guys to pay off your credit card debt or get out of credit card debt, get out of student loan debt, and also create an emergency fund savings account that you actually have a physical one. And this is because of the fact that, the average American doesn't even have $1,000, whether saved up or in credit card availability, just in case of emergency. So what you want to do is you don't want to be part of the average. You want to separate yourself from that and be part of those who are above average. And by being above average, you want to make sure you have at least $1,000. It could be in credit card availability, or it can be in actual physical cash. Credit card debt is actually the worst debt you can have. I was looking at a study that showed Americans owe $1 trillion in credit card debt. 1 trillion. Honestly, I don't even know how many zeros that are. I just know it's more than a billion. It's more than how much money Jeff Bezos has. So if we're owed more money than what Jeff Bezos has, that's a lot of zeros. And even with rate cuts, credit card interest rates are higher than interest of mortgage, interest of auto loan, interest of student loan combined. So that just shows you just how high credit card interest rates really are. So what you want to do is you want to get out of that as soon as possible and as quickly as possible. And if you guys need help with that, just contact me directly. I can show you how to budget yourself. I can show you how to focus on different investments for the short term, for the long term, whichever one best fits your needs. I also have a credit course, and within that course, it shows you how to travel for free. It shows you how to use your credit to your advantage, how to get money back. These are things that we need to learn how to go about doing. These are things that the rich are doing that we're not taught. So what I'm going to do is show you guys how to go about doing that yourself. If you need help with that, again, just contact me directly. Now, I was looking at some student loan statistics before recording this video, and currently 45 million Americans are in student loan debt, and collectively they owe 1.6 trillion. Again, I don't even know how many zeros that is, but that's a lot. That's a lot. Now, with rate cuts, it's actually a good time for you to focus on getting out of student loan debt. With rate cuts, it's actually a perfect time to be refinancing your student loan. A lot of people aren't aware, but you can actually refinance your student loan debt. There is a huge pro and a huge con to it. The huge pro is that you'll be refinancing your student loan, which means it'll be either a lower payment or a lower amount owed. The con to the fact is that now you just open up a newer loan. And what that pretty much is, you'll just be replacing an old loan with a new loan. So on your score, it'll be reported like you have new debt added to it. So like I said, guys, just wrapping up the pilot of the Hansome Kelly Show, talking about the Fed rate cuts, why it is important, why you should pay attention. Again, it impacts your money. And if it impacts your money, you should pay attention to it. Again, guys, as well, make sure you like, subscribe, and share. As more views, as more comments as we get, as more engagement, it helps out the algorithm. And if it helps out the algorithm, it'll help out with me going back to my producers and signing that contract so we can have a full season. All right, guys, take care.